I'm Joe Corrigan, General Counsel for the Buyer's Edge platform, Vice President of Strategy and Strategic Relations. I'm joined by VP of M&A, John Prindeville, and one of our legal interns, Kevin Connolly. We're going to be reviewing today the various coronavirus and COVID-19 operator relief media support that we've created on our website, as well as the regulatory relief resources that we've built on our website. Talk about the CARES Act loans, and in particular the Paycheck Protection Program loans. Really, from a high level, review the loan detail itself, who's eligible, use of the loan proceeds, what folks are going to need to be thinking about to apply for these loans, and obviously we'll then do a more detailed dive into the application process that's been approved by the SBA. So let's start first by looking at our Operator Support Center, and I'd encourage JP and Kevin, if during the presentation you have comments you'd like to add, or you'd like me to take a break and answer a question or two, I can do that. So starting with the Coronavirus Operator Support Center, we've done what I think is a pretty good job trying to really identify for our operators the questions that we're getting. We've set up a 1-800 number that our operators can call during this time to ask questions that they have about, staying open, about doing delivery, about converting their business to the current climate. A lot of operators are currently trying to do grocery to go and related delivery items. You can see we've indicated on here what we have for resources and adding groceries to the menu of our operators. We've done, in my opinion, our marketing and design teams have done an incredible job taking some very rich content, generating business ideas for our operators in this very difficult time. We've also made an attempt to categorize and put it up for our operators, those frequently asked questions that we're seeing around the coronavirus and COVID-19, and other resources and answers that we're trying to provide to those questions. If an operator comes on the site and doesn't see an answer to the question they have, I encourage them to do one of two things: either to email our support form here, and if that if that is not the preferred path, they can also call our help desk and our 1-800 number, and a live person will speak with you and answer your questions. What we tried to do was immediately trace the industry response, and in particular National Restaurant Association's response to what was happening with COVID-19. Obviously, there was a huge outreach to the White House and the administration from our industry, the hotel, restaurants, casinos, hospitality industry, the restaurant industry, and accommodations industries. The NAICS 72 or 7.2, however you refer to it, in the National Association of Industry Codes. We really have seen a great outpouring of support, at least in the manner in which the government's responded to the effort. Particularly, the CARES Act bill brought about some pretty immediate relief, and we've done a pretty decent job, in my opinion, of outlining the various aspects of relief that are available, both to individuals and businesses alike. I encourage folks to check out our website. There is a very detailed explanation of all the various aspects of relief that are available under the CARES Act, from unemployment insurance to workforce development to new limitations on withdrawals from 401ks, extension of unemployment assistance availability. Then, of course, we've tried to do a pretty good job of explaining what's available under the various loans that have been made available. In particular, we highlight on our website two loans in particular, and you forgive me for scrolling for a second because I'm going to refer to sort of the side-by-side analysis that we've done on the website here of the two loans. And in particular, we're looking at the economic injury disaster loans, the EIDL loans, which have a max loan amount of $2 million. The SBA is currently taking loan applications right now. As you can see, there's a link to the SBA's site where those loans can be processed right now. The focus of this talk really, however, is in the second category of loans, the Paycheck Protection Program loans, which we have a maximum loan amount of 10 million. We're going to get into detail about how you can apply for these loans, who is eligible. We're going to talk about the various industry exceptions to the Small Business Association guidelines for who qualifies as a small employer. We'll talk about the use of the loan proceeds, the various insights that we're getting from the SBA and Sba Approved Lenders, and then of course we're going to get into a specific application. So from a high level, the Paycheck Protection Program is really, in my opinion or an estimation, a good exercise of common sense by the federal government in trying to incent behavior on the part of employers who they really want to see get their employees or retain their employees and keep them on the payrolls. So these dollars are designed to do is just that, which is take a 2.5 month period of time and encourage employers to bring their wages back up for those folks who have reduced wages of their employees, and to rehire full-time employees who are making $100,000 or less. So the legislation is really aimed at driving incentive to operators to do those two things: reinstate wages of folks earning under $100,000 and reemploying full-time those folks who they've either made part-time, furloughed, or laid off altogether. So you will see the incentives under this act really drive that type of behavior and are doing so deliberately. So who is eligible for the Paycheck Protection Program loans? I would say that the folks who are eligible are small companies, which are defined under the SBA as those companies who have 500 or fewer employees. The exceptions for the restaurant NAICS code, accommodations in restaurants, allows there to be more than 500 employees if there are no more than 500 employees in any one location. So take a multi-unit restaurant or a large casino or a hotel group. If you have no more than 500 employees at one given location, given your presence in this industry has been highly impacted, the exceptions under the Paycheck Protection Program allow you to still seek these funds as a small employer. In addition, there used to be an SBA exclusion to those folks who have private equity or venture capital backing. There has been a specific exception to allow those folks with the restaurant NAICS and accommodations NAICS code to still receive consideration for a Paycheck's program loan, even if they are private equity backed. And that's a special carve out to the affiliation rules that are set up under the SBA. What can I use the proceeds for? So proceeds are really intended, and this is something that we really want to emphasize to our customers and members alike, that this incentive is really designed to drive payroll. So the insight and feedback that we are getting from the SBA and Sba Approved Lenders is that if operators want to get a forgiveness of these loans, then they really need to focus on spending at least 75% of the loan proceeds on keeping their folks employed. And to the extent they're going to spend 25% of their proceeds on other things like mortgage interest, keeping the lights on with utilities, and group health benefits and the like, that's permissible. But the likelihood of getting forgiveness of the loan, if you exceed that 25% threshold on non-payroll related items, becomes more dubious. So we'll talk a little bit more about forgiveness as we get into this application, and I'll invite Kevin or JP, whomever would like to talk about it then. The feedback we're getting right now is that repayment terms will be approximately 2 years. Interest will accrue during a deferment period, which will be an initial period of 6 months. While interest will accrue on the loan, the interest rate is fixed at 0.5%, so 50 basis points, which we obviously think is incredibly low. There will be no prepayment penalties associated with paying off the loan early, and underwriting for these loans should be relatively straightforward. There are certain questions that you'll see in the application guide that may preclude those operators who have who filed for bankruptcy or defaulted on an SBA loan in the past. But by and large, these are non-recourse loans. And what I mean by that is there's no personal guarantee that is being sought and no UCC security lien being extended by the SBA or the SBA lender to the assets of the operator. So very, very positive. It's a good opportunity for our operators to get their hands and access to cash to keep their folks employed and working, and do so with very little exposure personally or to the business. So obviously it's a very encouraging thing. I'd like to invite Kevin, if you could, quickly talk about forgiveness under these loans. Kevin, what are we hearing from the SBA guidance and other industry insight, like from BDO, about what's going to be, first of all, what's included in the calculation of average monthly wages? That's question number one, is what's included in that calculation number? And I can pull up something to help you walk folks through that. And then secondly, I want to make sure I get the right resource for you here. Bear with me. And then lastly, what is going to be included in the forgiveness, right? So, let's talk about how do you calculate and what's included in the calculation of payroll costs. And I think there's a pretty good description here that I've highlighted on the screen. If you talk to that, and then secondly, let's talk about forgiveness. So go ahead and address those two things if you can.
Sure, thanks, Joe. The first thing, so when we're discussing payroll costs, as you can see on screen, it includes salary, wages, commissions, or tips, capped at $100,000 on all annualized basis for each employee. And this also extends to other things, including employee benefits, and that's cost for vacation time, parental, family, paid sick leave, which has been extended as part of the other federal programs that we've seen throughout the coronavirus pandemic. And also payroll counts as state and local taxes assessed on compensation. And then this also extends to sole proprietors, because not all businesses under these thresholds are employing vast amounts of people.
Yeah, very good. So on the first piece then, and this bears repeating, it's really important for our operators to understand that those employees making $100,000 or less are the ones that the SBA and the SBA lenders are going to focus on. They want to see you make sure that those folks are earning at least 75% of their salaries. So to the extent you have employees that are making $100,000 or less, in order for you to assure forgiveness of your loan, you want to make sure those folks are making at least 75%, if not 100% of their salaries when you put these loans to use. And
right.
I think that bears a little bit of coverage as well. What do people do with respect to forgiveness, Kevin, and what time frames are going to be relevant, both in terms of how the average monthly payroll is calculated, what period of time will they look at, and then number two, how long does an operator have to get their payroll and full-time employees back up to where they were pre-COVID levels?
Right. So just to put one fine point on something you just said, Joe, everything you said was exactly right. But the basis for the employees who make less than $100,000, that will be looked at based on their 2019 annualized income. So some people get raises periodically, but what the people who are going to be determining forgiveness will be looking at is whether they made less than $100,000 annualized during 2019. And now you mentioned that there is this 8-week period that will be operating, and when they're determining forgiveness amounts, you can make some changes during the period and still not sacrifice your loan forgiveness. So the office will be looking at changes that are made between February 15th, 2020 and April 26th, 2020. And if you make changes to reductions in pay or the amount of full-time equivalent employees, which is individuals who are working 30 hours or more per week, you can make changes in reductions, but you have to reset what you had done by June 30th, 2020 in order to restore your full forgiveness potential. And what the
sorry, Kevin, go ahead.
Oh, and I was just saying that, and what the office will be looking at to determine if you are actually keeping people on payroll properly and restoring your full numbers in payment potential will be that same period during 2019. So the onus will be on you, the borrower, to show that the reductions that you made, if you did, were consistent with what would have happened during the same or similar period during 2019. Because again, the purpose of this program is to ensure that people are being paid as they would if the pandemic wasn't occurring, and that we're protecting the people who need to be on payroll the most.
And in particular, there's going to be an 8-week period after which the loans are extended that the Sba Approved Lender is going to be looking to the employee to certify that they've done or the applicant or the borrower to certify that they've done certain things with respect to their full-time employees and to those folks who are making $100,000 or less. And they'll have to make certifications that their levels in 2019 were X and their levels during that 8-week period are Y. And that is going to be the touchstone, if you will, or the measurement, if you will, by the SBA lender of whether or not forgiveness is going to be afforded. Now, what I've advised folks, and I want to reiterate this here, is no one should be taking this loan with the idea that they need to have it forgiven because of X, Y, or Z. Most folks need access to these funds to stay open, to keep people employed. That is the intent. If you can happen to get forgiveness for these loans because you're able to bring folks back in whole or in part, that is fantastic. I would say always consult with the SBA approved lender who is providing you with the funds to get a full disclosure of both the terms of the loan, the rate of the loan, the repayment period, any period of deferment, and if it's going to be forgiven, what the standards for forgiveness will be. Those are standard disclosures that any SBA approved lender will have to provide to you at the time of borrowing. The Truth in Lending Act and the Fair Credit Reporting Acts require it, and you should insist on getting it as borrower. So those are considerations that as folks look to take these funds, they should absolutely take into account. I think now's a good time for us to sort of dive into an actual application. So what we've done here is we've downloaded an application from the website, and what we're trying to do here is you obviously have your business name, whether you are a nonprofit, veteran organization, tribal organization, self-employed, and the like. If you're operating as a DBA, say for example, you're Joe Corrigan offering, we're operating as Joe's Taco Shack. You insert Joe's Taco Shack here. I insert my individual name here. I insert my social security number and my contact information here. Obviously, those folks who have a legal entity, be it a partnership, a limited partnership, a corporation, or an LLC, those would be disclosed here, and obviously the EIN or the employer identification number would be disclosed here. We've just discussed those things that go into the calculation of the average monthly payroll. We are providing our trusted members and customers this tool that we will make available upon request, or probably post to our website after this webinar is done and concluded, that will help operators calculate the average monthly payroll costs that have been incurred. We encourage you, obviously, if you have access to an accountant or a bookkeeper, to utilize those resources. An attorney, if you have access to that during this time, they can assist you in completing these applications. We don't necessarily think you need to do that, but we leave those decisions to each of our individual customers and their resource levels and what they have access to. We think this is a pretty straightforward application. As you can tell, the entire application is only 4 pages long, and there's only 2 pages which actually require the input of any data from the operators. We previously used this presentation for our internal folks, so we've completed this with some information. But the questions are relatively straightforward. Who owns the business? In this application, they want to know who are the individual owners that own 20% or less, 20% or more of the company. Those are the folks that need to be disclosed here, the percentage of ownership. There are a number of questions designed to get at whether or not the business has ever been suspended, debarred, voluntary excluded from participation in any federal department or agency, or are currently involved in a bankruptcy. In addition, has the business ever defaulted on an SBA loan in the prior 7 years? Those are going to be hot button items that likely will get these applications rejected, and that's unfortunate for those operators that need the funds and have experienced those events, but that is a gating item for the SBA for obvious reasons. So that third question really goes down to what's called the affiliation test. And what our operators really need to understand here is two things. If you are owned in part by a business that has common management or is owned by another company, you got to disclose that here. And generally speaking, what we've told folks is in the past, the SBA would have excluded any venture or private equity backed companies. Our NAICS code or industry code of 7.2 or 7.2 or 72 or however you want to describe it, that is specific to accommodations in restaurants, has a specific carve out in the Paycheck Protection Program that allows those private equity and venture capital backed companies to still have access to these loans. With that said, you do need to disclose your private equity investor. And this is where you would do so. You'd click on yes, and then as an addendum to this, you'd have an addendum A, and that addendum A would say, yes, we are invested, and we have private equity partners, LLP is invested in our business. Because of the affiliation test, we still qualify for a loan under our industry code of 72. And you can indicate at that point whether or not the private equity firm meets the ownership threshold for disclosure. If they're under 20%, I would simply indicate the existence of the private equity owner would not have required disclosure, but for the affiliation rules test, which we clearly are part of an exception to under our industry codes. Obviously, they're looking to understand whether or not you've applied for any other SBA loans, including the EIDL loan, which we talked about earlier. Our advice to folks is start with the Paycheck Protection Program loan because the threshold for relief, $10 million, is higher. There is no recourse or personal guarantee on those loans. If you fail to receive those funds, then pivot to an EIDL loan, which is, again, at this time being administered directly by the SBA. They want to know whether or not you've ever been incarcerated or you're currently subject to criminal information, indictment, or arraignment. That's kind of important information to the SBA, and we encourage all of our customers to answer these questions honestly and accurately, whether you're a U.S. citizen. And obviously, there are a number of disclosures and certifications that the operators need to, who are 20% or more owners in this business, all certify to and initial during the application process. So the applicant literally would just simply add their initials if they understand each one of these disclosures, right? And again, one of the very important things that I want to draw some attention to here is the guidance we're getting from the SBA is there's so much demand for these loans that they really want to encourage those folks who are getting access to these funds to use them for payroll related costs. So as they say here, due to likely high subscriptions, anticipate that more than 25% of the forgiven amount may be for non-payroll driven costs. Now, that's not to say that you can't spend the money in that fashion. If you choose to spend the money on non-payroll related items in excess of 25%, you may have a impairment of your forgiveness and you may lose it altogether. Those are individual determinations by the individual SBA lenders. We encourage you to ask for the underwriting standards with respect to loan forgiveness at the time in which you apply. I'm going to pause here just because I've been talking a while, and I want to encourage Kevin or JP if they think there are questions that maybe some of the listeners on this webinar might have, raise them now and I'll do my best to answer them, or even punt to Kevin to answer them.
I think that one thing that is worth bringing up that John and I were discussing earlier is that some people may be curious as to kind of the nuances and differences between the this PPP loan and then the traditional kind of disaster relief loans that are being offered by the SBA. And while you can be eligible for both types of loans. There are differences between who may be able to get those loans, and there is a fact sheet on our frequently asked questions page that will break down the difference between those two types of loans. That is definitely worth checking out in order to kind of get a quick overview of the differences, because there are some substantive differences between the two loans, namely the SBA loans. You'll be applying directly to the SBA for that particular loan, whereas these other ones, you're going to be working with a bank. Yeah, right here, it's up on the screen now. I encourage people to take a look at this particular fact sheet in order to kind of get an overview of the differences between the processes and forgiveness for both of those different types of loans.
Yeah, no, and I would encourage folks too. This is meant as a quick reference guide. This was put together early in the week when the SBA guidance was somewhat more limited. The SBA has, since this guidance was published, provided greater clarification on things like the term of the loan. We know now, for example, that the terms of these Paycheck protection loans are going to be approximately 2 years. We know that the fixed rate is 0.5%. So there are some differences. Again, deferment we now know is going to be 6 months, not up to a year. So this is a somewhat fluid situation. While we encourage folks to use all of our resources, especially the ones that are most current and most recent, we also encourage them to be mindful that the SBA approved lender from whom you are taking the funds must give you their terms for lending. And that will be the last stop for you in terms of validating what you're getting for a loan, how much you're getting, what are your terms for repayment, what are your terms for deferment, what are your terms for forgiveness. Those should be your Bible when you go and explore extending these loans. Let's talk about that quickly. How do we go about getting the loans, right? So you need to use an SBA approved lender for these loans. And if you're not sure whether or not your current banking institution is an SBA lender, then we have provided a link on our Regulatory Relief Resources site here we are, to a list. Again, this is about the Paycheck Protection Program Act, but on the website, you can see there is a link to the SBA and the SBA approved lenders. And you can see here, these are the most active SBA, Section 7A, which is what the Paycheck and EIDL loans fall under, the most active lenders. You can see there are names that everyone would recognize: JP Morgan, US Bank, Wells Fargo, so on and so forth, Citizens, TD Bank. So, the key here is we've been told by the SBA and various SBA lenders that preference will be given to existing customers. So we encourage all of our members and customers to determine whether or not your existing banking relationship is an SBA approved lender. Most FDIC insured banks are, in fact. So I think we're gonna be in a very good situation relative to those folks that have existing banking relationships with an FDIC approved lender, because those folks tend to be also SBA approved. To the extent you've discovered you don't have a banking relationship, we're highly encouraging folks to establish a banking relationship quickly in order to get the preference. Obviously, this is not a time to shop banks, if you will, but if you have the opportunity to make a meaningful deposit with a bank that's also an SBA approved lender, we think that couldn't hurt your chances of getting approved for one of these loans. JP or Kevin, is there anything that I haven't covered, do you think I need to cover or should cover before we wrap up this webinar?
Joe, I think as you just pulled up that list there, it's a good time to remind folks that the list that you showed, obviously has the big banks kind of right up top because they're the higher volume, lenders. However, it's not to say that your local lender is not able to provide you with these 7A loans. Now, we'll also contrast that by saying that for the economic injury disaster loan, you don't even need to go to your local bank for that. You can go directly to the SBA website via the link that we've included here on our webpage and get all the information and apply directly to those economic injury disaster loans from their site.
No, that's great. That's good heads up, JP. And what I've done here is I've just highlighted for those folks who want to quickly reference what you need to apply for these loans. There is up on our website. The SBA has given some guidance on what they think is going to be necessary in order to prepare. These are the things that our operators should be gathering today as they get prepared to make their applications to SBA approved lenders. And I just want to draw attention to it. I'm going to indicate to our marketing teams and our COVID-19 response team that is maintaining our COVID response regulatory relief site that they're to post 3 readily willing and able resources for our members to find easily. That'll be the SBA Paycheck and EIDL loan application links, the loan payment calculator, the easy calculator we went through in this guide, and then obviously this list of things that you should have. I think with those 3 things in our webpage, most operators are in very good shape to be able to prepare their applications and hopefully get the paycheck loan relief they most desperately need. We want to, unless Kevin or JP, either of you have anything else, I think we can wrap it up here and thank folks for taking the time to listen to our webinar.